Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, the bulls are set to end the week on a very strong footing. Of course, on the back of the revival in risk appetite that we are seeing in global markets at this point of time. Throughout the past 3-4 sessions, we have seen the global markets have revived, and on the tail of that, the Indian markets have also edged higher. Although at this point of time, it seems like we might be closing off the day's highs, Santo, but still very much in the green. The Nifty and Sensex will close higher for the third consecutive day, which is quite a remarkable feat given where we are coming from. And for me, the most important thing, Santo, of course, is the fear gauge. The India VIX again fell over 2%, and it is basically indicating that some of the bullishness is creeping back into the market, with the fear gauge now heading towards 1.5-month lows.
Well, CJ, is there a sign of investors getting complacent a little bit?
Complacent? I really doubt. I mean, after 17% drawdown in the market, I doubt investors are complacent.
Well, yeah, the mood this week is in stark contrast to what we were seeing last week when the market ended lower after a very firm start. But there's been a marked improvement in sentiment. If you speak to brokers, they're saying that HNIs and retail investors are a little more upbeat than what they were. Only natural considering that prices have moved up. But overall, again, if you look at the MF equity inflows for the month of June, probably that could give a slight indication that incremental money flow is definitely getting affected to some extent.
Yeah, of course, on a month-on-month basis, of course, the the equity MF inflows were lower by about 16%, if I'm not wrong. But still, the number were absolute numbers were still pretty strong. I mean, given the fact that we did not have any NFOs in the month of June, I mean, I think it's still a pretty strong number. We'll have to wait and see how the SIP numbers are.
I think, and now what you're likely to see is very specific stock action starting from Monday once the earnings start coming in, because the broader move in the Nifty seems to be over. I think now you could see some kind of, again, the index moving in the same range between around 15,700 to 16,200, but you will see a lot of stock specific action.
Well, that said, Santo, let's quickly dive into the 5 stocks that we have our eyes on today.
Well, starting with ICICI Lombard. Now, CJ, suddenly, the street seems to have turned very bullish on this stock.
And I know, I've noticed.
One reason is that the stock has been a rank underperformer for the last almost 2 years now. It's been consistently underperforming, and now because of that, I think most analysts are of the view that valuations have come to a point where the risk reward ratio is beginning to appear favorable. So, couple of points in favor of ICICI Lombard here. One is that vehicle sales are expected to pick up in the coming months, and that more vehicle sales obviously means that more insurance business for general insurers.
Yeah, vehicle is also a big part of their portfolio in general. So
right.
I think
also,
that is where
ICICI Lombard is now investing more on this in this healthcare segment. Also, that's been one segment it was not really been focusing on, and according to IFL, that is one of the areas where they will give more focus on. Besides that, the merger with Bharti AXA. So initially, there was some teething issues with that, but now the merger synergies are likely to kick in, and IFL also sees a 39% compounded growth in earnings between FY22 to FY24. But mind you, it has trimmed earnings estimate a bit. However, it still continues to be bullish on the stock.
Well, in fact, Santo, not only IFL, even Motilal Oswal Financial Services, which initiated coverage on the stock with a pretty aggressive buy call. They are also expecting a 25% almost CAGR growth in earnings going ahead. But what I feel is that, what analysts are getting at here is probably the age-old game of mean reversion, right? I mean, valuations are so depressed at this point of time and are below their 5-year median on ICICI Lombard that you would expect sooner or later there will be a mean reversion or reversion towards the mean.
Quick point here, CJ, but that is ultimately what investing is about, right? At some points, you need to pick stocks at the right price, and maybe ICICI Lombard.
But it is also true, Santo, that in India, if you're getting a low PE, there is a good reason for that. And I'll tell you what the good reason is. Of course, the main issue of investors with ICICI Lombard has been the fact that it has been losing market share. It's lost almost 200 basis points of market share over the past couple of years to rivals. So clearly that is one issue that analysts had, and I think that also adds to the fact that there is almost a 18% selling that has yet to come from ICICI Bank, right? ICICI Bank currently owns about 48%. Now, depending on RBI regulations, they have to trim that stake down to below 30%, right, over the next 12 to 18 months. So that is a huge amount of selling or supply of shares that have to come to the market. And I think that will keep the stock under pressure going ahead. Apart from that, excuse me, from a fundamental point of view also, Santo, the company is going after growth at this point of time by sacrificing profitability. We know you have been, talking about it, that this market is totally focused on profitability at this point of time. And according to Motilal, the profit growth probably, or the PAT growth, will continue to lag behind operating profit growth going ahead. So clearly, I don't think that even the earnings could provide the support to the stock that a lot of analysts are talking about. So for me, I would still wait and watch on the stock, and I will not be wanting to go aggressively in just because of a mean reversion in valuation.
Mean reversion will still help you get profits.
Well, we'll see about that. One stock where I totally, the market is going sort of against the grain is Indian Energy Exchange. Now, the entry of a new competitor always gets, investors a little panicky. But this time around, the view out there is that the panic is a little unwarranted, because IEX overall will continue to grow at a very rapid pace, because the entire industry itself is going to grow. The power exchange industry is no way a mature industry, right? The entire revenue pie is going to grow, and therefore the entry of a new competitor, which is basically backed by BSE and PTC India, called Hindustan Power Exchange, if I'm not wrong, that is unlikely to dent the prospects of IEX going ahead. Apart from that, you look at what UBS Securities had to say. They have in fact gone out and upgraded the stock to a buy rating after the announcement of Hindustan Power Exchange. So clearly, UBS is quite bullish that they expect the growth momentum in IEX to continue going forward, and they feel that the past 6-7 months of correction, since the highs of October, November, the stock has corrected close to 30 to 40% from its record highs, and they feel that now the PE of about 41 times 1 year forward earnings is clearly quite attractive, given the fact it is now below its 2-year average. So clearly, I think, Santo, brokerage like UBS being positive, the views that they are bringing out, and the fact that the entire market itself is going to grow, I just don't feel that investors should be concerned about a new competitor getting in.
Well, CJ, the stock seems to have gone, swung between two extremes. If you look at last September, October, this was the toast of the town.
2021 was all about IEX.
It was everything about IEX, and you saw the stock climbing to close to about 300 rupees. And from there, it's been downhill, relentless. Now, yes, there have been two big concerns. One is obviously the emergence of competition, which was expected to eat into margins. And secondly, also the regulatory overhang, in terms of the commissions that IEX could charge. There's been talk for some time that there should be a cap on that, and IEX has been asked to justify that. So this is the concern. These were the two major concerns. Now, if you look at the overall numbers which the company has reported for May and June, the numbers are been quite decent, which shows that probably it has managed to stand up to competition quite well. But this, CJ, to me seems to be a case of, when there is a sudden euphoria over any stocks, and then, that comes up very sharply for whatever reasons. Maybe market got a little ahead of itself, and now you've seen the stock almost come off by 40%. So there's a lot of disappointment with the stock at this point in time, and it has become, in some ways, I mean, it would be a harsh term to use that, but what in market you typically call the fallen angel. After flying very high, the stock has suddenly come off. So I think what would probably happen is that there are a lot of people who are stuck at higher levels, because at one point in time the stock was very fancied. So it might not be really because of fundamental reasons, but the fact that there is so many sellers,
possibly waiting to,
waiting sellers, eager sellers, that may probably weigh on the stock, which is what probably the stock also seems to be showing, because despite good numbers, good updates for May and June, stock price has not really gone anywhere. In fact, it's been still slipping. So I think it is more of technical factors at play in the stock at this point, CJ.
Well, Santo, my only point here would be the fact that, if you're trying to always, they always talk about in the smaller mid-cap space that you are looking for gems, right? But when gems are found, the initial rally is always followed up by a very big crash. And then you see another big rally that takes you beyond the previous highs. So I think if investors are looking at that sort of an opportunity, then I think getting staggering your investment into IEX could be one way to play at it.
Well, the third stock on our watch list today is Marico. Now, again, this is the second quarter in a row that the company is giving very disappointing update, and its sales have been pretty much flattish.
Still you have it on your plate.
Yeah, that's because CJ, exactly. I knew you would ask me this. Now, couple of things here. One is that copra prices have been easing, and that is likely to benefit Marico over the medium term. Right now what it's doing is it's passing most of the benefits on to its consumers, and which is why you're not really seeing that growth in its sales. That at some point it will be in a position to kind of pass on that. But if you look purely at the stock performance, CJ, the stock peaked around November. It hit a high of around 583 rupees. Since then the overall outlook for FMCG sector in general has been negative, right? And the company has also in April also given a negative update. Again, now it's given another negative update, second quarter. But the correction in the stock is just about 15 to 17%. Technically it's not even slipped into a bear territory. So maybe what I think here is that CJ, the market is seeing something, is already priced in the worst, and given that we have a very safety first kind of approach at this point, maybe a section of investors feel that this is a stock to hang on to, and the clouds could be clearing in a few quarters from now.
Well, Santo, I don't agree with the fact that 15 to 70% for a FMCG name is actually quite considerable. I mean, this is not a metal or commodity name that you would expect a 30-40% sort of a drawdown. For a FMCG name, 15-17% correction, I think is a
that is for the correction. Really heavyweights.
It's a healthy correction, and Marico is no small player out there in the market. It is a very legendary name in the FMCG space. So clearly, I think overall outlook for Marico has been quite negative. My only thing is that even if prices on the margins or the margin picture might improve, the demand picture still remains quite sorry for a company like Marico, clearly because their dependence on the rural market is so large that until and unless the rural sentiment recovers, and they have stated in their quarterly update that the sentiment or consumption sentiment in the rural market was especially weak. I mean, leave alone the entirety of the urban market. Apart from that, one thing I noticed that the hair oil volumes, they also fell in the first quarter, and that for me is a bit concerning given the sort of heft that Parachute has in their overall earnings. Lastly, the management has said that it is possible that a net profit will keep on lagging operating profit, because of course operating profit might improve because your costs are coming down. As you mentioned, copra costs have come down, so therefore operating profit could be quite good, but net profit would continue to lag. And we know that prices move on the basis of EPS, right? If the EPS is not improving, then I really doubt that the stock price will also edge higher, in the future. So the upside seems quite limited on this counter for me.
I can't argue with on that part. The upside clearly looks
absolutely. One stock where the upside has been limited, but the downside has been a little exaggerated is Coal India. Clearly, Coal India has been painted in the same brush as the entire commodity pack, even though the fundamentals of the company in itself on a standalone basis are quite strong. If you look at the sort of commentary and the data that the company has released, in the first quarter, the coal offtake and production figures were quite strong. We saw double-digit growth, which is quite almost 2 to 3 times of the 5-year average for Coal India in terms of offtake and production in the June quarter. So clearly that should add to some bit of confidence on the investor side. Plus, Credit Suisse believes that they, of course, by the way, have an outperform rating, and they believe that Street has to probably move ahead and start upgrading their earnings expectation for Coal India, because the way the Street is going at this point of time, it's suggesting that Coal India's earnings or the heydays of earnings or FY22 are probably behind, and therefore FY23 will see a slowdown in growth. But clearly the picture at this point of time is not indicating any such thing. Credit Suisse is of the opinion that investors should start tracking the e-auction prices instead of e-auction premium going ahead, because e-auction prices is where you will see a lot of upside for Coal India's earnings going ahead. So clearly, Santo, this is one stock where this again seems to be a bit of a mispricing. Reminds me a little bit of Hindalco, where the fundamentals are still quite resilient, quite strong, but the stock price has fallen dramatically. So for me, this is another contra play in the market that investors can take advantage of.
Well, yes, good dividend yield play.
Absolutely.
CJ.
I mean, I have not even touched upon that part at all. I mean, just talking about the growth.
So good, but my concerns here, CJ, now, whole of last year, coal prices have been shooting through the roof.
Yeah.
And what's the
even
kind
now,
of, even now, but where is it reflecting in the earnings? FY22 earnings top line grew by just about what, 18%.
18% for Coal India is a lot, Santo. I mean, come on, we are
If
talking
you
about a
look at-
company which barely could grow its top line in high single digits for the longest
Exactly,
time.
but see, the point is, despite all that very high increase in coal prices are what, more than doubled over the last year,
Yeah,
right?
absolutely.
Absolutely, but you know, you're not seeing that. It's around, I think, yes, around 15 to 18% is what the top line has been. But more than that, CJ, the bigger concern here is that it's some kind of a, no, not some kind, it's a sunset industry. You know, the moment things start looking better overall.
But sunset industries are in at this point of time. I mean, look at crude oil, Santo. Everybody said
crude in India is not doing well.
Dead.
Now, see, again, you know, here's the concern that, you know, the moment the weather clears, people start talking like ESG, other things, you know, this is not the place to be in. But all this, the one thing that stands out here, CJ, is that throughout last year, even as coal prices were rising, the company's operating performance was good. Institutional investors have not increased exposure to the stock. You know, this is something that they continue to stay away from,
But
which
retail
also,
has.
which, yeah, fine. But you know, at some point, for a large stock like Coal India, for it to really get a re-rating, you need institutional investors also to come in. Otherwise, you know, the stock, look at the stock, it's been fairly range bound. It's moved up, but that's when you see it's been moving from between 120 odd to, you know, close to about 200.
It's still to take out as 3 or 4 years.
Exactly,
highs.
it's not
I mean,
break, and until institutions, you know, really warm up to the stock, that's not.
I think the only reason institutions are not warming up, of course, is the entire ESG issue. Of course, a lot of these mutual funds have now signed up to a lot of these ESG norms and you know, standards and guidelines. So clearly, they're a little tentative at this point of time. But ultimately, Santo, the price speaks and return speaks. If you want returns, you will ultimately bound to come back to a counter like Coal India.
Well, this is the last stock of the for today, and being a Friday, maybe, you know, probably this is also something that
Yeah,
could
I'm
resonate
noticing
with
you have been onto this industry for the past few days. Not only Friday, even on Wednesdays also. Sometimes.
GM Breweries is the stock. It reported a good set of first quarter earnings. Now, top line almost doubled.
As you expected.
No, but there was a reason for that. It has come off a low base. I'll take that, you know, and net profit grew by about 20%. Now, other than the earnings part, you know, this is a stock which is available for a fairly reasonable price, I would say, for good reason. The growth in top line has been quite steady.
Yeah.
But well, it's in a niche market, you know, country liquor, right? That's, you don't have too many listed players in that field. And the second part is the balance sheet, you know, hardly any debt.
Yeah,
and
that is true.
Receivables almost as good as negligible. That's a big surprise. It's also improved on its working capital days. So, you know, when you look at reasonable valuations, good clean balance sheet, I think it's a matter of time before market latches onto it and the stock gets re-rated.
Well, Santo, I think GM Breweries has always been that stock that always remains under the radar. You know, it will have its days in the year, but then ultimately it will fall off the radar, and you will see it as a consistent performer. You're not going to lose too much of your capital, but your capital is not also going to appreciate too much. And for me, the only concern right now here is that, you know, what will inflation do to this sort of the entire industry at large? I mean, not only GM Breweries, but the entire industry at large. We'll have to wait and see how the Q2 numbers, you know, volume numbers pan out. Clearly, because Q1 is largely discounted because of the low base, right? But Q2 a year ago was quite good because we are coming out of the second wave. We had an entire reopening of the economy. So we will have to see whether that base effect, you know, still exists or not. Next, the worries around slowing consumption, as I mentioned. I mean, there have been reports that employment has been slowing, consumption has been slowing, especially in the rural areas. So clearly, it will be very interesting to watch out how the Q2 and Q3 numbers pan out, and maybe if the company is able to defy the odds, clearly I think it will be in for a re-rating. But if not, then it will be the same old story. And lastly, this is one point that I have talked about United Breweries as well, the overhang of possible increase in alcohol taxes to compensate for the, you know, the lower ad valorem taxes on fuel that a lot of states have been taking. Alcohol generally tends to take the sacrifice in these sort of scenarios, and I would be a little circumspect about possible increase in taxes going ahead, and that could definitely have a big effect on volumes.
Well, serious, sometimes you worry too much, man. Anyway, before we move on to Ashwin Mohan, our colleague who's waiting for us with an update, a quick look at the market, CJ. Nifty has again managed to bounce back well,
yes.
about up 85 points currently, and market breadth is also fairly good at this point in time. More than 1400 stocks are gaining and 1200 stocks are down.
Yeah, I mean, we are of course, I mean, a bit off the day's high, even in the broader market. Santo, the Nifty Small Cap 100 and the Nifty Mid Cap 100 indices are higher by about 0.3% each at this point of time, but it looks like we are going to have a green close. And yeah, I mean, this week I think would probably, when people write about this week is going to be the revival of the sentiment in the broader market, Santo. I think that will be the big takeaway for me in this week, and we'll have to wait and see if that continues into the next week.
Well, with that, we move on to our next segment, and Ashwin Mohan is waiting for us with an update on an IPO from the Tata Motors stable.
Yeah, for the first time in what, 18 years, Ashwin?
Good afternoon, Santo and CJ. Great to be back on the show. Yes, you hit the nail on the head, CJ. This is probably the first major IPO coming in from Bombay House in 18 years. You heard that right, 18 years. And remember, the last big one was, of course, TCS back in 2004. Now, in the interim period, of course, you've got the likes of Tata Auto Components flirting with the idea of IPO. They filed a prospectus, they withdrew it. You keep hearing about Tata Sky. But if the IPO plans of Tata Technologies go through and fructify, then we are talking about the first IPO from the Tata Group, and also, of course, the first IPO under the leadership of the current group chairman, N. Chandrasekaran, in a long, long time. So a few details about this company. What we're picking up from our sources is that the IPO has kicked off recently. Investment bank Citi has been taken on board as an advisor. There are a few other domestic and global investment banks that will soon join this particular syndicate. Now, from a market's point of view, and of course, the Tata Motors stock perked up in trade after Moneycontrol broke the story earlier during the day. And now, from a market's point of view, what's important is that it's a subsidiary of Tata Motors. Tata Motors holds around a 74% stake in Tata Technologies. What's the company all about? The company is essentially a production engineering company and a digital solutions company. So that's what it does. It has presence in Europe, North America. And if one were to look at its past, it's got quite an interesting past, Santo and CJ. You'll be surprised to hear that 4 years back, it was actually on the block. In fact, there was a large minority stake that Tata Motors wanted to sell in Tata Technologies, around 40-odd%. They had gone ahead and signed a deal with Warburg Pincus, but the deal was called off. Wow. Back then, Tata Technologies was valued at around $840 million, if one were to look at the deal contours back then. Since then, of course, I'm given to understand that, it's had a spate of good luck. In the post-COVID era, there's been a surge in demand for EV as well as aviation, and that has augured well for it in terms of revenues. Its revenues at the end of 31st March 2022, around 3,500 crore rupees, PAT of about 437 crore rupees. So it's a company in high growth mode. But that's the interesting point, right? At one point of time, they were looking to sell a minority stake in it. Those plans didn't take off. And now they're looking to unlock value via a potential IPO in the coming days. Too early to talk about the size and the structure. It's just sort of taken off, preliminary days. But, Santo and CJ, both of you will agree because Tata Motors has a debt overhang, right? Yeah. And they have wanted to reduce debt for quite a while. In fact, the chairman, N. Chandra, has said that they have a target of attaining near zero auto debt status by FY24. So, these are the certain moves that will sort of help the group. So those are the details that we're picking up at this point in time.
Yeah, Ashwin, if I can butt in here, I mean, you spoke about when, last time when they were trying to sell off a minority stake, the valuation was near the ballpark of about $800 million to $900 million. Given the spurt in earnings that we have seen, where do you think, in your estimate or in your learned view, where do you think the valuation could be for a company in the technology space, in the EV space, which is, the talk of the town across the world? Where do you think that, what could be the feeling of around the valuation point?
Santo, now CJ, now you're asking me to crystal ball gaze. I wouldn't hazard a guess in that direction, but let me put certain numbers in context as far as our audience is concerned. So 4 years back, 2018, that's when they were looking to sell a 43% stake.
Yeah.
And that was the deal that was struck with Warburg Pincus. And for whatever reasons, in fact, there were certain regulatory reasons and, the company's internal performance also wasn't up to mark. So for those two reasons, that deal was called off. Now, if one way to go at the, go by the contours of that deal, around $840 million, that would be the exact valuation of 100%
Yeah.
of Tata Technologies. It's been 4 years. We have seen a spike up in revenue, spike up in PAT. In fact, the chairman of the board is ex-TCS veteran S. Ramadurai, and in the annual report, he did refer to it as well. Really, really difficult at this point of time to go ahead and sort of, talk about what valuations it could get. Maybe one parallel could be, L&T Technology Services, perhaps. That's also in the product engineering and
yes, exactly my point.
Yeah. So, no ready reckoner valuation right now. And in fact, we'll have to wait and watch going ahead what kind of appetite there will be for a company like this, because it's a niche company. But the most important part is that the parent is Tata Motors. Tata Motors is in debt reduction mode, value unlocking mode, and they've tried a minority sale in the past, which did not work out. And now they want to, try and make a D-Street debut. So let's see whether this works out or not. If it does, it could be a big one for the Tata Group, because like I said earlier, we haven't seen a listing in a long, long time from this diversified conglomerate, guys.
Well, thanks for that update and all the insights on that, Ashwin.
Thank you so much, Ashwin.
Right, guys, back to you.
Well, CJ, just wondering, whether this is the right environment to go ahead with an IPO, considering that the sentiment for the auto sector in general is just beginning to improve. It is still not nowhere near what it was.
I think Santo probably is better to ride the cycle when it's just beginning instead of waiting it out till it's at the peak. We have already seen what has happened to certain startups last year, and they were trying to ride the cycle at its peak, and it ended up turning out to be quite bad. So I mean, if you look at the grey market prices, I think the stock price in the grey market is somewhere around 4,800 range, and a lot of people in the grey market are quite hyped about this stock. So I would not be surprised if this IPO does come out, this could have a good reaction from investors.
So what are the big earnings to watch out for?
Well, Santo, of course, the earnings season kickstarts today. We will have TCS, the big IT behemoth, coming out with its Q1 earnings, June quarter earnings later in the day. Tomorrow, DMart will be coming out with its earnings, and then next week is the IT mailer of earnings, Santo. A lot of IT companies will be coming out with the earnings. So clearly, the Q1 earnings season will be well underway by the time we meet you next week. So that would be one thing to watch out for. The other thing to watch out for, Santo, would be the crucial non-farm payroll data in the US in the evening. Well, the jobs market data would be a very big data point that will come ahead of the US Federal Reserve's FOMC meeting later this month. So clearly something that investors will be keeping their eye out on. So a lot is happening globally. We will have to watch how crude oil prices develop overnight. Today we'll have to watch how Wall Street develops overnight. But I think now, as you mentioned earlier in the show, a lot of the movement could become stock specific, because the attention will turn towards individual stocks as the earnings numbers come in, while the macro setup remains largely the same. I mean, at this point of time, we can't predict too many violent changes in the macro setup the way it has been over the past 2 to 3 months.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live next week, Monday morning at 9 a.m. sharp. Till then, have a great weekend. Relax a little, go home, be with your family and friends. Santo, you too?
Yes, thank you, CJ.
Great.